Hello traders and welcome to another video review. Today is Monday, April 29th, 2024. Let's find out what is going on the economic calendar for today. To do this, we are going to switch our calendar for the most important data releases for today. So let's now check, are there any high importance, high impact data? Okay, one high impact data is German CPI data release scheduled at 2 p.m. As you can see, the previous reading was 0.4%. Now the forecast is 0.6%. So the market participants expect an increase in German CPI to 0.6%. How it's going to be, we will see soon. Because it's the only one high impact event, let's just switch to the medium events. So there should be some more, but it's Monday, so you never know. All right, so we got some data from Sweden, from Euro, from the Spain, Italy. Everything is about the CPI anyway. So from the Euro and Eurozone and Euro related countries. Eurogroup meeting starts at noon. There we have the German CPI and some data from the Russian Federation, retail sales, GDP monthly, unemployment rate. And then at the end of the day, 20 past 9, very strange hour, ECB, the Guindos will give a speech. So basically expect the German CPI. The Monday is apparently, it looks like it's non-event. Non-event, they expect the German CPI. So please be focused, be vigilant during this data release. Again, 2 o'clock p.m. German CPI numbers. They will apparently be released. So that was the economic calendar review. Let's find out what is going on charts. We are going to start, as usual, with the majors. Euro-dollar first. Euro-dollar for our chart is showing us a very interesting candle. What it is and how it happens to be here on this chart. Let me just remove my Fibonacci retracement tool to show you guys what is going on, what I suspect is going on. Now we broke above the supply zone, yes, so we made a local high at 1.0753. Then we went a little bit lower to test this zone again. We hit the level of 50 on the RSI and we bounced. Now that movement towards the level of 1.1031 is on the euro dollar. Let's find out if there is some kind of a behavior like this on the other markets. So we are going to switch to dollar related pairs. For example, the other major, US dollar, Japanese yen. Oh, that's interesting. We got something here. Very big reversal. Look at this. On the US dollar to Japanese yen, we got a local high at 160.20. And then we got the low of 155.25. This looks like the Bank of Japan intervention. And maybe, just maybe, it spilled over towards the other markets, like euro dollar, because dollar, yen, euro, dollar, related pairs. And one of the four majors. Now, we are still trading above the technical support 154.78. So that's basically good news for the bulls. However, with this kind of a massive situation here, there might be some sort of the correction or maybe trend reversal. You don't mess with the central banks, okay? The whole Forex network is basically the central bank networks. They rule here. So if there is a suspicion of any sort of the intervention of the Forex market, it's not quite wise to play against it, basically. All right. So if this is, I don't know, but if it is central bank intervention, Bank of Japan, we might see, even if the price will go up, another intervention, because the power of the Japanese yen is very, very weak. The US dollar to Japanese yen, as you can see, let's just zoom out. That's only for our time frame chart. It's going up and up and up and up and up from 140 to 160. That's a massive situation here they are dealing with. Massive gain of the US dollar. Let me just, there you go, price range from the low of the 140 to the highs of 160. This is 14% in 4 months, not even 4 months. Okay, that's massive, which is why Bank of Japan might have done the intervention on the Forex market. And that's not the over yet, because if we switch to the, I don't know, daily, you can see that the down is, the swing low is even lower, 157. And if we zoom out, we can see that the low is even in 2023. That's the beginning of the 2023, the 13th of the January, 127. So if we consider the situation in 1 year and 16 months, 16 months is 26%. Let me just figure it out. There you go. Just come to my swing low, my dear tool. 25%, 25%. Okay, so okay, let it be 25.91, 26% increase in just a little bit over the 1 year and 1 quarter. That's a massive, which is why the Bank of Japan might intervene on the on this market. Now, the other situation. Let's just switch to the other majors. British pound, nothing here. All right, on the daily time frame chart, nothing here. I don't see anything suspicious, and it didn't spill over to the British pound. As you can see, the British pound is still this scenario is off. Right, is still continuing to move higher towards 125.50. Maybe as bulls will continue to hit the next target, 125.73. We will see very soon. And if we just zoom out and just extend this line here, we got our trend line, of course, from the swing high. So if we extend this trend line, we can see that the market is testing this trend line right now. So we had this breakout to the upside, and then reversal, then another breakout, and then complete rejection and new swing low. So maybe the situation now will be repeated. So please stay ahead of the market. Please watch the situation here on the British pound. We might see some sort of the profit taking. We might see some sort of the reversal as well. We can get rid of our levels here and the supply zone, because the major one is here right now between 1.2689 1.2706. So that's the major supply zone. The next one, if there is a breakout to the upside, if there is not, all of these levels here are the technical supports. One more I'm very curious about is the yen related pairs, so euro to the Japanese yen. As you can see, another evidence of the central bank intervention. So the high, the swing high, 171.52, low 166.53. That's another few percent of the movement to the downside. If we switch here, then we can see that the major technical support 165.29 has not been affected just yet, and we are coming off the extremely overbought conditions anyway. Now I bet on the British pound to the Japanese yen will be the same situation. There you go. 252 swing high, 194.75 swing low, but we are still trading above the major technical support. So please keep an eye on this level, 193.50. If we break below this level, Bank of Japan will achieve its aim basically, and the market might turn to the downside. However, for now, it doesn't actually look like this intervention. Let's say it is possibly a central bank intervention has got any issue on the market. British pound to Japanese yen, US dollar to Japanese yen, a euro to Japanese yen, longer than immediate. Immediately they reverse, but it keeps moving higher anyway. So doesn't actually looks like a situation where they achieve the aim. They might intervene again. And right now we are looking at the Bitcoin at the beginning of the week, and the Bitcoin is following our scenario. Our scenario is saying that we are going to hit this demand zone. We are going to hit this demand zone yet again. We might break lower. We might rebound again. However, every time we hit the demand zone, the rebound is shallower and shallower. So we might see some sort of the test of the demand zone and then movement even lower towards the major single technical support level, 59,172. If we trade below $60,000, the immediate trend is now reversed from the uptrend to the downtrend, or even the the continuation or the extension, maybe the extension of the downward correction. Okay, so please keep an eye on the $60,000 and particular level of 59,000. Where is this? 59,172 as the major technical support. Please notice that on the 4-hour chart we are approaching the extremely oversold conditions, so this zone here is the perfect zone for the market to bounce back up again. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.